Good afternoon, everybody. Today is Wednesday. It's the 9th of October 2013, and the market finished mixed here. The S&P 500 was up 12 cents, but you can see we're still clearly in that intermediate term downtrend below the declining 5-day moving average. Looking at the 30-minute time frame, or actually let's go back to the 65-minute time frame. We've come down obviously beyond the 2/3 retracement, and today we did see some recovery intraday as it got back above the VWAP here, but it found resistance at the pivot, which was also, as I was pointing out, very close to the level of the 2-day volume weighted average price. So this market, if you're going to trade the long side on these types of rallies here, then you should be only doing it for day trade opportunities. The market is guilty till proven innocent in the intermediate term. We have a declining 5, 10, and 20-day moving average, and the longer term trend, of course, still remains higher, but we did break this trend line this week, and perhaps if we don't continue further lower down, maybe towards this level, then I think at least some sideways choppy action is likely ahead. So we want to stay focused on the individual stocks, and when we see opportunities in the ETFs, then take advantage of those on a very short-term basis. Today I'd pointed out in the Russell 2000 the inverted head and shoulders pattern that was taking form, and I pointed that out right here, and then I had pointed out just after that it was getting up to the 2-day volume weighted average price. Now I wasn't making a recommendation. What I wanted to do with this Russell 2000 was to point out the possibility that the market could move higher and leave that interpretation and what type of trade you ought to take or just not do anything with up to you. I'm not here to provide the intraday scalp ideas, but clearly if you had gotten involved, there was an opportunity, and I'd pointed out the potential for resistance here at the 2-day volume weighted average price. So that's the way you want to use those observations, is to say, wait a minute, is there a trade opportunity here? What's really going on? And decide for yourself. I don't want to tell people what to do for day trades. It just gets too confusing and too many questions and not enough time to explain them to the people who might not have really the discipline to trade on a intraday basis on such short time frames. The Russell, though, did get down to the 2/3 retracement level. You can see it almost tagged it precisely, and that tells us that perhaps we're going to find some support in this area. This has been a prior area of importance in here, but really, again, there's no evidence that this market is turning higher. The only thing that we can say is that it's come down pretty quickly, and it seems kind of foolish to be an aggressive short seller down here when it is at a 2/3 retracement and when we have a 50-day moving average that's still advancing. So I would look for this market to maybe settle in near this area. It's holding this trend line. It's holding this prior, the 2/3 retracement. So it seems like a level where we should find support, but the fact is we closed below the volume weighted average price, and that any opportunities in here trading should be just that for mainly day trade ideas. The NASDAQ was down 24 cents, or about 2/3 of a percentage point. We saw yesterday that this important level, 78.25 to 78.50, was broken, and we were thinking that possibly we would come back up to that before we continued lower, but instead we just saw continuation lower here this morning, and we saw in here that our 2/3 retracement is also something that got hit and exceeded, and this band of prior resistance in here really between the 50 and 61.8% retracement. So this prior band of resistance looks like maybe it's going to provide some support, but we have to be suspicious when the market sells off this sharply and this quickly. We broke this trend line obviously, and now any rallies will be suspect up to about that 78.5 level, and we'll be looking at them as bounce candidates only, not as something that you want to swing trade. To me, it's foolish to buy down here, but sometimes it works for people. I think your risk though is if they don't scare you out, that they're going to wear you out. We're going to take some time, come back and test these lows. The semiconductors were down 13 pennies as this group lost support yesterday too. That 39.5 to 40 level, really that prior band of support now looking like it is going to in fact offer resistance. We're going to need to see the semis back above 40 before we can trust the intermediate term trend again. We did come down and test the 38.2% retracement, so this market is still relatively stronger, but it wouldn't surprise me to come down and fill that gap in. So the semiconductors are again relatively the stronger group, but they're showing intermediate term weakness and below a declining 5-day moving average with a pattern of lower highs and lower lows. We simply cannot trust this market until we see it back really above 40 or so. The financials were up 7 pennies. This market has been. This group has led us on the way down. And I had a question that I often get asked today, which is, what do you make of the divergence? So, for instance, the financials were up, and the financials in the S&P were up, whereas the NASDAQ and the Russell were down. What do I think of that? Divergence, basically, does it mean anything? And I don't think you want to read into it at all. If you're trading the financials, you have to look at the financials independently, as we have. We were looking at it saying it's guilty till proven innocent, lower highs and lower lows, and we've still got that case of lower highs and lower lows. It outperformed on a one-day basis, but this is a market that's undergone considerable damage here recently. We're at this neckline. The obvious necklines typically do not work. That is, if you're looking to sell short here, especially after a decline. What's more likely is a rally up, and we find more resistance up in here, and then perhaps it gets that bigger decline. But it's good to be aware of those patterns, of course. But right now, nothing's changed for the financials. There's still a pattern of lower highs and lower lows. If you're going to trade the financials, look at the financials. If you're going to trade the semis, look at the semiconductors. Don't look at the euro. Don't look at what gold is doing. Look at what you're trading is doing and manage risk based on that. Be aware, if you want, of the relationships, just like you want to be aware maybe of what the earnings are for a company, but that's certainly not going to give us a reason to buy or sell. We're looking for low risk, high probability trades, and that's what we're focused on consistently day in and day out, regardless of what the market environment is. Shares of Apple were up $5.50 today. I was close to mentioning it, and I don't want to make it look like hindsight. I was close to mentioning it in here because I thought, maybe breaking above the day's high, that it could run to the 3-day volume weighted average price. I didn't mention it though because I thought it had already had a decent run from 478 to 484, and I didn't want to be late on it. But regardless of that potential for a trade that I didn't mention, the shares of Apple, really, this is the key level up here near about 493.5, 494. The stock holds up well. You've got to be impressed the way that's holding in here. I think you take out the highs for the week, then we're going to see this stock back up pretty quickly, I would think, to $505 to $510 a share. On the intermediate term time frame, though, we've just kind of got it back and crossing back and forth above and below this 5-day moving average. We've got a band of support right in here between 480 and 478 and 482. Here's our band of support, and here's our band of resistance up in here. So it's really kind of neutral here within a better picture here with a rising 10, 20, and 50-day moving average, and with it above the 200-day moving average as well. It seems as though it should be able to break this trend line and the recent highs, and then continue to move higher. So I'd still keep an eye on it, but it's early to take any action.